first event co-organized by the Crypto Valley and the EPFL Innovation Park. I will first introduce myself. So I'm Jérôme Bailly. I'm the head of membership of the Crypto Valley Western Switzerland chapter. I will explain you what is the Crypto Valley and what are we doing here locally and in our Western Switzerland chapter. And then I will explain you why are we organizing this event and what you will learn. So why this event? So at the park, I spent the last 12 months within the park working for Lake Diamond. I worked on the ICO of Lake Diamond, and I realized that all the companies are looking for money. And at Lake Diamond, we learn how to raise money using a new way. It's about tokenization. It is open for startup, not only, it's also for scale up and SME. It allows entrepreneurs to reach for new infrastructure investor. It's an alternative to debt and equity. It does not oppose to this other way to raise money, but it's a new way to do it. And news, end of last year, it's now even allowed to issue tokenized security under Swiss law, and we have two speakers today that will also explain this. So what will you learn during this event, workshop? You will learn first the basics of tokenization for fundraising. You will learn the difference of tokens, utility tokens, payment tokens, security tokens. You will learn what digital security is, and you will also learn how to market your token sale for raising money via ICO or STO. So yes, once again, I really want to thank all the EPFL team, Björn, who supported me to organize the event. And I want to invite Jean-Philippe Lallemand, Managing Director of the EPFL Innovation Park, to say just a few words about the park and the event. Yes.
Yeah. Okay.
If you.
Hello everyone. Maybe quick question: who doesn't know EPFL Innovation Park here at all, or a little bit? No, everyone knows quite a bit about EPFL Innovation Park. So I'm going to be very brief then. Welcome to everyone. A few words about the EPFL Innovation Park. So we have now almost 26 years of existence. We have 200 companies currently on site, including about 150 startups. We have over time we have had more than 500 companies. They have raised more than 2 billions. So we're in the billions. I don't know exactly 2, 3, something like that. Every year there is about 1/4 of all the capital raised in Switzerland that is being raised by the startup from the Innovation Park or EPFL alumni. So we're 25% or so, and we hope to stay at that level or even more than that, because one statistic that is quite important is that we have about 10% of the startups from EPFL that become scale-ups. So they become very successful startups with tens, hundreds, and soon thousands of employees. And they tend to stay in Switzerland and even locally. So we have this depth of experience. And obviously, being EPFL and the Innovation Park, we are interested in very disruptive innovation, disruptive technologies. And clearly, if we can raise money through STOs, this is disruptive. This is what we want to see. So this is something for us quite important. At the same time, of course, we keep and develop the relationship with more traditional VCs, more traditional type of investors, including corporate VCs. I see some corporates in the room, and but this is, I think, a tool for everyone. It could be a tool for one day for investor. It could be a tool for all of other institutions. And actually, I don't know if Emmanuel, you're not on the program, but maybe you can mention that in your fund you're going to use also STOs to attract new investors for the fund Blue Ocean Ventures based in Geneva. So again, we're all very interested, and we hope this is one of the key elements of the future of investing in our community of startup and scale-ups. So enjoy.
Yes, thank you very much, Jean-Philippe. A few words about the Crypto Valley, because I assume some people don't know us, or some people think it's an association in Zug, but no, it's not only in Zug. This is our vision. So the vision of the association is to enable blockchain and crypto to secure, decentralized, efficient, and trustworthy system. Our mission is to become here in Switzerland, not only in Zug, in world Switzerland, to become this world leading ecosystem. So the association has been created 2 years ago, in 2017. It's true that it's been created in Zug, but the valley is not only Zug. The valley is the whole country, the world Switzerland. Young association, but very successful. More than 1,200 members worldwide. 1 out of 3 members are outside of Switzerland. And we are organized by chapter, local chapter. So here we represent the Western Switzerland chapter that connect the Romandie with Zug, and then we want to also gather Geneva, Vaud, and Neuchâtel. And we have a new local team. 2 people will be there today. Emily at the back, and Sarah will come. So we will have the opportunity to talk to the Crypto Valley Western Switzerland chapter team during the buffet, networking buffet. The benefits to become members, lots of benefits, of course. First of all, you can access our network, expert networks. Then you can use this brand. This is a very powerful brand. The Crypto Valley is known worldwide. Not only in Switzerland, everywhere in the US, in Asia. As a member, you could use and tell you're part of the association. You, of course, are invited in a lot of events. So this is, of course, a free event to introduce our association in this chapter. But there will be more events coming. Some of them will be limited to our members. Advocacy. You will help us to do lobbying in Bern, lobbying in Lausanne, in Geneva, everywhere we need to contribute to better business conditions for crypto. Education, you will learn with us, stay up to date, leverage trainings, and also, of course, networking. This is a lot about networking. If you're a startupper, if you have a project, then you might be interested to use our association to find investor. If you are a service provider, you want to use our platform to offer your service, and if you are an investor, you can use our network to select the best project to invest in. Join us. It's really easy online. cryptovalley.swiss/join us. It's pretty cheap. 100 francs for a year for an individual, and a company starting at 500 for a startup. Everything is online. You can even pay with crypto, of course. To follow us, the website, and on the LinkedIn and Twitter, you find us at the Crypto Valley. And this is the hashtag of today. I propose this Crypto Valley EPFL, CV EPFL hashtag. If you want to tweet or LinkedIn, use this hashtag if you want. So here are the speakers. 4 speakers today. We will start with Ralph in a minute. Ralph's coming from Zug. CVVC, excuse me, I forgot one V, too many V. Then it will be Arnaud. Arnaud will speak second. Arnaud coming from Geneva, PELERIN, has done a very successful STO, maybe the first of its kind, end of last year. Vincent will speak third, CEO of Token Estate. He will explain us what digital securities are. And I will come back to give you a view on marketing and communication of a token sale. And I will share what I've learned with the ICO of Lake Diamond. Okay, so please welcome Ralph Kugli from CVVC. Okay. Tiens déjà ça. The mic. Je te laisse.
Très bien, merci. you.
Okay, thank you, Ralph. So after each presentation, of course, you will be able to ask questions, but I will also ask the speakers to come back at the end for 10 minutes panel. So.
Can you hear me? No. Maybe no more power. Yeah, hi. Well, maybe the batteries are dead. So, very good. And I will put my timer because I want to be true. So, yeah, my name is Ralph Kubli. I work at CVVC. I'm in the space for about 3 years now. 2015, I got into crypto. I was still living in the United States. And then I came back to Switzerland to build the future of capital markets with all you guys. So that's why I'm here. Just so maybe I can gauge the room. Who owns Bitcoin? Right, fine, good. Who owns shitcoins? All right, also a lot of people. Very good. So just that gives me a good idea. Why are we here? Really, maybe we should contextualize this, and it gives us a good feeling. So in Switzerland today, there's 800 companies, right, in this space, right, in all of Switzerland. The top 50 companies, I mean, we issue a report together with PwC. We try to gauge, market cap and so on. The top 50 companies in Switzerland have a market capitalization of $40 billion, right? So, and according to our latest count, which will officially be published in a few weeks, we counted 4,500, let's be optimistic, 5,000 people, that work in this space now in Switzerland. So that's a big industry. So this is why it's important that you join the Crypto Valley Association and help Jérôme really build, the awareness here in Western Switzerland as well. What do? We're a VC. We believe that you need more than just capital. You need an entire ecosystem, which we are building for ourselves, but also for the benefit of the space. So, we are investors. Obviously, we incubate. We have an advisory arm. I'd like to become a merchant bank. I can still say that before next year, right? I can say whatever I want. So I want to become a merchant bank maybe one day. We have a co-working space in Zug, right next to the train station, in case you've ever been. We have 120 companies domiciled in this space. And I would estimate that probably 80% of those companies have real substance in Switzerland. So, it's not just like a postal box. So it's real stuff. We run competitions. We've done 3 of them. And we have a big industry event, which is in the spring and in the fall. So we don't compete with the Crypto Valley conference, which is next week. So that's what we do. Now, what about blockchain? I can go through a few of those slides quickly, and then because I would like to convey the bigger context. You hopefully all know what we've solved with Bitcoin and these cryptographically secured currencies, right? We've solved the double spending problem, which is really the key to the future of how we build economies. And the way I look at this is I got excited about this space when I read in 2015 some papers on the idea that, with this technology stack, we're really competing, or this technology stack is competing with institutions of capitalism, right? So I think it's really clear. You have to understand this will replace markets, this will replace companies, this will totally change the way that principals and agents interact with each other, and subsequently this will really impact how we operate and how we build companies or how we build businesses in the future. Maybe not companies, but how we build business in the future, right? So I'm not gonna, because you guys all own Bitcoin, so I'm not gonna really talk about Bitcoin. So, so blockchain as a technology really helps us build a joint and shared ledger, as you know, and then we can agree in certain ways, hopefully reliably, unless we have, some Chinese miners that decide otherwise to attack, but, we can reliably share information and really be certain about what happened. And then what came after that, so what came after the blockchain, for me, the next step, as you probably know, is smart contracts. smart contracts, the idea that you can have some if-then statements, you can have certain machine-executed, unstoppable programs that have some kind of attachment in the real world or just in the machine world, right? So unfortunately, they're not quite, sorry for the color there, but unfortunately, smart contracts are not really smart, nor they're legally binding contracts. So we have to really overcome this in the next iterations and how we tie some of the software-based systems to the real world. But we believe as investors, it really is going to make a big difference in how we operate. So just how we contextualize this and how we also think of this when we invest is we're going to move from an internet of the information to an internet of values, where we can track values, where we can ascertain items, where we can own digital representations, securely own digital representations of assets. These assets could be software, these assets could be IP, these assets could be real values that are anchored in the real world, like Vincent does, and we just own a piece or a part of the representation thereof. Why is this so important? So we have moved to from a concept of shared economies, which we understand quite well, where we have centralized environments, and if you combine that with the crowdfunding aspects of what you're experiencing today in this nascent industry, you're ending up with network economies where people build on top of certain applications or on top of networks on top of communities that exist, with either applications that, as now, in centralized environments, which is very easy to do, or hopefully in the future, on decentralized ecosystems with a degree of certainty that is much higher than you have today. Why is this relevant? Because we believe that there will be token economies that will start to exist, and we can share, as you can see here, we can own assets a lot easier, we can share, we can participate in these economies. So instead of investing in a company and in a legal structure, you will invest in the upside potential of Ethereum, as some of us have done, right? Where you hope that Ethereum will be used in a huge economy as gas to basically power this economy, right? So there will be other business models that will emerge. Jérôme and I, we briefly talked. I wanted to include this. Just I think it's relevant to give context of how I look at this space. So as you know, thanks to our regulator, we have a classification of tokens which we can follow, and I think it helps following this classification. So there are payment tokens. You can invest in payment tokens as well if you want to, that store of value or transactional environments, depending on what you are interested in. So use of that is Bitcoin, obviously, Monero, stablecoins. And the idea here is, from the regulator point of view, that they can be used independently from anything, and they're just a payment instrument, really, ultimately, and they can be exchanged between P2P. Now, then we come to utilities. Utility tokens, obviously, utility tokens have a little bit of a hard time these days, occasionally, because some of these systems haven't been built. People issue, access to their environments, and the stuff doesn't work. So, and maybe it will be built, or maybe it won't be built. So that's where we are. But obviously, there are, some pretty interesting projects. The ones that I really like is, a good illustration is Storage or Filecoin, and then of course Ether. To me, is basically the gas that powers the entire economy, right? And you need that to access this ecosystem. And then securities, where the other speakers will talk about, there will be a financial instrument that will be represented with a token, and you can buy this instrument. And we think of this as just a representation, of real assets. But I think you should also start considering, and I know there's a few investors here and financial financial services people, you should also look at concepts like Actus FRF, which I didn't put here, but Actus FRF is really the idea that you also represent the entire rules and the way that you arrive at the calculation in a standardized way at a certain value in a standardized way. So if you're interested in how you're going to really disintermediate banks, you should look at Actus FRF. So my key takeaways are, that really you should expect digitized assets, which we already have actually, but they allow you to have instant transactability. You will share a business ledger, and it will be you'll share a ledger, and you will share also business processes. So someone that I attended a speech at or a talk at Consensus a few weeks ago in New York. I mean, not at Consensus, so outside of Consensus, but I was in New York. Framed it very well. So we really think that at some point, most of the applications that we see would collapse into this kind of environment down the road. And of course, what's the impact? What's the impact from an investor's point of view, and what's the impact? How I think about this space. There will be an economy that will revolve around automation. There will be a lot more human-machine collaboration because we can trust what the machine tells us. The machine can trust what we give it. You may coordinate really complex systems, and let's be very clear. I also believe that there will be, machine-to-machine interactions, enabled. So, and lastly, I think the computational environment itself is really about basically a new class of computational infrastructure. So so that's really it. So I think Jérôme said. So I'm at very good. I'm well within my time.
Thank you for your presentation.
Thank you.
Yeah, just a few words. CVVC is a founding member of the Crypto Valley Association. It's not the same. It's a private company, but you're from the initial team of the Crypto Valley in Zug. So thank you for coming here in Romandie, showing that the Western Switzerland chapter is important for Zug. So we have the time for one or two questions now. If you have one question for, in the meantime, you can plug. If you have one question for Ralph, any question about Zug, CVVC? No. So we will maybe use the time at the end of the event for bringing back together all the speakers together for panel session. Okay, so now Arnaud Salomon is plugging the computer. Arnaud from PELERIN. PELERIN has done one of the most interesting STO, maybe the first of its kind end of last year, coming from Geneva. Now you can. Tu veux qu'on ferme ça? Ok.
Hello everyone. I'm very happy to be here. Actually, I did my studies, my master thesis here in this building. I come from communication systems. I did all my career although in finance, and a few years ago we started a project that is called PELERIN. I'm going to give you just a brief overview, but we're building a new type of bank in Geneva, a digital investment bank. This is not really the topic of today, but we are really here because we believe in disruption, and we believe that we want to actually bring a paradigm shift in this industry. And of course, to do so, we did an STO last year, end of last year. As it was said, it was one of the first of its kind. The idea here that we really wanted to do was to actually bring some kind of certainty to our investors. We wanted to bring them some kind of legal protection around their investment. And it was very important for us because the 2 years before that, we have seen a lot of exuberance in the ICO world. We've seen a lot of promises that were actually not always fulfilled. And we really wanted to bring some kind of, legal protection to our customers. And the idea was really to incorporate the share of our company into tokens in order to be able to sell it to the crowd directly. So it's basically a crowdfunding, but you organize it yourself. You don't go through a platform. You don't use any external providers. You just self-organize the whole thing. This was a unique experience. This was a very interesting experience. And the way we did it was also a bit challenging, of course, because again, normally, if you look at it up until then, in order to transfer a share of a company from one person to another person, we needed to have the so-called endorsement, right? So meaning that you have to, handwritten signature endorsing the transfer from party A to party B. So that was obviously the first problem to overcome. Yeah, this was solved by a professor in Basel. That he came up with a legal opinion saying that we can actually get rid of that and recognize the blockchain as the shareholder registry, and having the digital signature of the blockchain being as valid as pretty much the traditional handwritten signature. The STO was successful. We managed to actually sell, so we had like a maximum of 5% of our company to be sold to the public, which was sold, all of it. We raised a little bit more than 2 million thanks to that. Of course, this is not enough money for the project we have. Of course, we need to capitalize the bank. So it's, but it was for us a way to actually not only raise money, but it was also to address ambassadors, right? So what we created was a community of ambassadors, not only contributors, but also, also because we closed it at the end of last year, they came back to their family for Christmas, for New Year. They shared, their experience, they talked about it, and, they spread the words, basically. So it was a very positive event for us because not only we raised money, but we also created a community. So of course, it all comes down to a marketing event, right? So it's basically a real marketing event. But before we talk about this disruptive way to raise money, just wanted to give you a brief overview of what is disruption. So we speak a lot about disruption, yeah. So I mean, we all know the two first company, Airbnb and Uber, and nobody pretty much knows the third one. But what's the common point of these companies, according to you? They all started to operate pretty much in the gray zone, yeah. So if you look at it, Airbnb, they started to offer hotel type of services without having all the authorization, without being like having the fire extinguishers and all the things that hotels have to comply with, and even paying the taxes that come along. Uber, they started to do the taxi without the taxi license. And of course, what happened to them is that they got fined. And they paid it with the VC money, which was fine. But the third one, Liberty Reserve, they started to actually try to make the banker's job without having the license. And the outcome of it is that the founders took collectively 300 years of prison. Yeah. So when you deal with money, when you deal with things that are in general the prerogative of banks, you have to pay attention because legally you risk something, right? So you have to make it right. And if you look at it today, all this fintech now is enabled because the legislation has changed. We see that today the regulators, they are willing to actually have something more inclusive, have the startup being able to do things that were in the past only for banks. Yeah. So for example, for payments, yeah, we all know that today payments is, we have a lot of companies that are not banks that are doing payments. Before it used to be the sole prerogative of the banks. And of course, now we have a new technology, blockchain, which enabled Bitcoin and Ether for payments. This was quite interesting because this is two approaches. So one exists because it exists, so Bitcoin and Ether. Yeah, it just exists. So that means that even if regulators would like to actually shut it down, it's impossible. They would have to basically shut down the entire internet. Whereas the two others took the regulated route. And this leads me to this very important aspect, the difference between crypto and tokens. Yeah? Crypto is basically a native currency that exists because it exists. There is no counterparty for it. Whereas tokens, all tokens have a counterparty, the issuer. And the issuer might be you. Yeah? So you're a company, you want to issue tokens. Whatever you want to incorporate into these tokens, you will be the issuer. You will be the one that will be legally responsible for what you do. So make sure you do it right. So of course, today startups, they have like plenty of ways to fund, right? So I mean, like you can address friends and family, you can address angels, business angels, you can address VCs, you can even do like traditional crowdfunding on the platform, pay some fees, they organize it for you, they even probably help you with the marketing events, etc. All this is pretty standard. But today with STOs, the so-called STOs, and again, STOs can mean pretty much anything, right? So I mean, STOs mean security token offering, but a security, pretty much everything can be qualified as a security. If you make a contract on a piece of paper that says, I will share with you 20% of my future revenue, that's already a security, right? But at the end, the investor is only protected by this piece of paper, which is a contract. So if on the back of this paper you write a little line saying that, but maybe in 6 months' time I can change my mind, well, that's already a valid contract because it's a private contractual agreement between you and someone else. Yeah? So STOs can also evolve in something more protective for the investors, such as incorporating shares into it, and meaning that the basically token holder is a shareholder, and therefore he's protected by Swiss law. Yeah? As a shareholder, you have rights. Yeah? You have the voting rights, the dividend rights. You have, so the company cannot, even if contractually they write something that is illegal, it's just illegal. Yeah? So I think it's very important to distinguish those two aspects for you guys if you want to actually get into this field. And the good thing with that, when you incorporate shares into tokens, is that it's basically the traditional way. So it's very inclusive. You can still work with VCs, you can still work with friends and family, you can still work with business angels, etc., and as well as addressing the crowd directly. Yeah? And this is pretty much the disruptive aspect of it, because before that, we used to have like VCs that would actually challenge the valuation of your company, they would actually have an illiquid type of positions, and if you have like some early investors, well, they would be locked in this investment unless the VC agrees to buy them back, etc. Here, with tokenized shares, for example, you can program pretty much everything you want. You can even think of programming a shareholder agreement in the form of smart contracts in order to actually make sure that you can enforce some kind of rules, such as the tag-along, drag-along rights, etc., the right of first refusal. And this is very interesting because today it's really opening up in a digital way what have been done so far in an offline way. So of course, the idea is that it democratizes the access to funding and investing. It creates somehow liquidity. Of course, today there is big issues because there is no exchanges for those. Yeah, so you can still exchange on a peer-to-peer way. So you can sit on the table with a friend or with anyone and exchange peer-to-peer, no problem. You can use smart contracts as well to exchange in such a way if those smart contracts have no operator. But today, unfortunately, there are like very, very, very few exchanges in the world that are regulated to actually operate as a securities dealer. But the idea is that by doing that early, you're also part of this growing ecosystem. And at some point, there will be exchanges. I mean, we are, of course, working on it. SIX is working on it, but of course, more on the institutional level. But you will see a lot of those popping up in the future. So secondary market is still an issue, but it's starting to solve. And again, the idea is really to be super inclusive. So anyone can participate, the traditional world, and pretty much anyone, the crowd. So the beauty is that, of course, you have a direct valuation of your company that is made by the market itself. Yeah? So you can decide on something, but if the market decides on something else, whether it is a higher valuation or lower valuation, it's up to actually the crowd and the market to actually decide how much it's worth. That actually blurs the line, really, between the traditional illiquid type of startup, the private equity type of investment, and the publicly listed companies. Yeah? Up until now, only the public listed company had actually a market price, and people could actually buy and sell and own get some rights and dividends and votes, etc. But before that, the early stage startups were completely illiquid, right? So you ask your father, your mother to invest into it, yeah, they help you at the beginning. Well, they have a position, this has a value, but if they want to exercise this value, if they want to cash out, it's going to be quite difficult, right? And this actually, the tokenization allows to actually blur completely the lines, and actually a startup from day one is actually pretty much like a company listed on the Swiss Stock Exchange. So again, so tokenizing securities can be pretty much anything. So you can tokenize shares, you can tokenize bonds, you can tokenize even royalty. So that's also something interesting. So I mean, like you can incorporate the IP of your company into tokens, and you can grant some future revenue sharing. Yeah. So you say, because the crowd owns the piece of software that I'm building, therefore I will pay to them a royalty. I will pay to the token holder collectively royalty, so you can keep, of course, some. You don't have to sell everything to the crowd. So it's really up to the limitation here is your imagination. Everything that exists can be actually incorporated into tokens. Yeah? Again, some part in the form of private contractual agreement, and some part in the form of having buy low type of securities. Switzerland is an amazing country for that. That's pretty much the only country where you can do that, actually. If you look at it, like in some countries in Europe, I'm not an expert about the European Union, but in some countries in Europe, they have the shareholder registry that is centralized. Yeah, so the SA type of company that we know, AG in German. Here in Switzerland, this is the responsibility of the company to maintain its own shareholder registry. Yeah, the list of all your shareholders. So because this is the responsibility of the company, it's easy for you to actually sell those shares and actually have people to actually register with you every time they want to actually exercise their rights, and therefore you maintain the shareholder list yourself. Whereas in some countries in Europe, I don't know if it's about all countries in Europe, you have to go, in order to have this transfer deemed valid, you have to go through a centralized type of state-run agency that maintains the shareholder list. And that, of course, is a kind of friction to the adoption of tokenized shares. So that's why mostly today what you see in Europe is private contractual agreement, where people grant you future revenue sharing or future dividend sharing, plus some kind of voting rights that are mostly consultative. Yeah, but the token holder is not really a shareholder, unless you can structure it, of course, in a way that you can redeem the token and you get written into the shareholder registry list. That's also different ways you can do it. So, of course, as we said, tokenized equity gives you the real ownership. And that's very important. And again, this is possible in Switzerland today. You can do it in a matter of days, actually. Yeah? It's not something that is super complex that will take you forever to run. Of course, when you actually conduct the sale to the public, you have to make sure that you respect certain rules. Make sure as well that you never onboard any US person, because then you can get into trouble with the US, because every time you onboard someone from the US, you have to actually file with the US. Same for Europe, by the way, but Europe has some levels that you can where you can play with, such as what is considered as a public offering in Europe is pretty much limited to 150 investors per country in Europe, per state members of the EU. That means that if you don't want to actually file a prospectus for the entire EU, and you just want to have like a self-done prospectus in Switzerland, you can, but you have to restrict the people that can access your documentation and invest in your company to 150 per country, per France, per Germany, Italy, Spain, etc., etc., which is already quite interesting, because you can address already thousands of people without having to actually have a proper filed prospectus within across the entire EU. But fundamentals do not change. So that's the important aspect, right? So I mean, the crowd is not stupid. They buy things that appeals to them. They buy things that they believe is a game changer. They buy things that they believe makes economically sense. Yeah? If you overvalue your company and try to sell it to the crowd, probably they will challenge that, and you would have less buyers, or maybe none. You have to actually make a proper business plan, of course. And the most important aspect, as we said, is marketing. Because again, you can have the most beautiful product on the market, you can have the most beautiful service that you've developed, If no one knows about it, of course, that's going to be hard for you to fundraise. So at the end of the day, you can think of tokenizing your company and doing the fundraising aspect, the crowdfunding at a later stage. That's not a problem, right? You can tomorrow decide with a board resolution of your company, we take the resolution to actually incorporate the share of our company into tokens. This is done. And then you can run your sale maybe in 6 months' time. It's not like something that is necessarily linked, right? And obviously, because we did it for ourselves, and our ambition is something that takes time to actually get to the market, in the meantime, we have pretty much services to help you. So today we have created a simple web page for you to self-issue for free. I mean, it's a web page that you can access. You type the name of your company, the amount of shares, the price. You can type the dates of the sale. So you want to make a private sale, a public sale, etc. You connect a hardware wallet, such as a ledger or a trezor. You click on generate, and it deploys the set of smart contracts. You can as well use that to actually add some rules. So if you want to have some restrictions of transferability, because somehow you might decide to have only people whitelisted that can own it, or you can say, no, I won't have free transferability, and I will register those token holders as shareholders only when they actually tell us who they are. You can think of incorporating things that are more tricky. Yeah. So let's say tomorrow you want to incorporate Swiss franc into tokens. Sounds easy. Yeah. But then you are becoming basically the counterparty for it. So of course you need to respect the same rule as banks. Yeah. Such as triggering the KYC, make sure that everybody is known, such as well triggering the AML, so anti-money laundering, making sure that you can document the economical context of a transaction, the origin of the fund. This are by rule, right? So, and this is actually all possible with the tokenization layer that we've created. And we offer you to help you, of course, on the KYC side, because this is very important. We are a financial intermediary, so we can do it on your behalf. We can even collect fiat currency, so meaning like banking wires, not only crypto, not only collecting ethers, but also collecting Swiss franc, euro, dollars, and pound directly from our account for you, so that we can collect from thousands of people and deliver to you. Because again, this is quite tricky. If you are going to ask your banker, I will do my own crowdfunding and I will receive on my bank account thousands of wires from around the world. Your banker is probably going to freak out and tell you that there is no way he's going to let you do it. Unless, of course, you show him that all your processes are actually in place, that you respect the same thing that he's actually imposing to himself, you know, like identifying the origin of the fund, etc., etc. So that we can help you with that. We can even help you opening a bank account if you need that, because somehow some companies in Switzerland have a hard time today to actually even just open a bank account when they put the name blockchain or crypto into the raison sociale. Yeah? Yeah, so we can help you with this as well. So tech, legal, and as well as the financial aspects and the regulatory. So, I mean, this is just a brief overview, but again, here, the important aspect is to be able to not only issue an ERC20 token, and ERC20 is the base tokens that you can issue on top of Ethereum, but to add some type of rules on top of it, so that it's actually fits the model you want to actually develop and sell to the public, and that as well it can fit the regulatory rule that exists. So it's really about having compliance oracles, you know, linking the off-chain world and the on-chain world, as well as having a rule engine and a user registry that the combination of the two makes the amount of rules pretty much unlimited. And that's pretty much it. Thank you very much for your time, and if you have questions, don't hesitate.
Yes, thank you, Arnaud. Thank you very much. Arnaud will unfortunately have to rush back to Geneva in a few minutes, so he won't be able to take question at the end of the event. So if you want to ask question to Arnaud, it's now or never. Yeah. So we have a mic. Come to you.
Yes. Hello. How does PELERIN plan to capture? You're offering your token, smart contracts, and the various services you say for free on your site. So how does PELERIN plan to capture the value that you're offering to other people for your token services?
Actually, we don't. So the idea here is really so we are creating something that we hope could become a standard at some point. And therefore, what we're creating is the basis. It's an open source. It's completely open source. It's totally free to use. We're even building front ends for people to actually interact with it in a more easier way and not having like the geeky command lines to interact with. So the idea is really like to provide a base infrastructure for anyone to actually use it for free. We want it to be used basically. So this is the root of what we build today. So we're building a bank where we are going to bring the entire balance sheet of the bank on chain. We're going to tokenize the entire bank, yeah? And this is the base of what we needed for our own use case. And therefore today, we don't intend to actually lock it and have it like on a, with a model of having some kind of utility token that you need to use in order to actually consume services around this tech. So the tech is completely free to use. Of course, if you want to use our bank accounts to our IBANs, because we can offer as many IBANs as you want to collect euro, dollar, pounds, or Swiss franc, etc., through our own accounts, because we have to conduct due diligence on that. It creates workload for us. We will have to charge you, but it's going to be fair amount of money, very, very fair, as compared to if you go to any, let's say, well-known Liechtenstein bank that could offer you that kind of service for quite an amount.
Thank you.
Emmanuel de Watteville de Blue Ocean Ventures. Bonjour Arnaud.
Bonjour.
Thank you for this good presentation, very clear, interesting. Now, we see that tokenization platforms are growing. There are many, more and more, around the world and in Europe. Mm-hmm. We have Token Estate also with Vincent. We have Tokeny in Luxembourg or Securitize. How do you differentiate your tokenization platform from competition?
Yeah, it's a very good question. So actually, of course, when we started this, we didn't want to reinvent the wheel. Yeah. So we looked out of the market, on the market, what is there? And of course, at that time, it was mostly about the Americans. So you name it, Securitize, Polymath, Harbor. Those are great, but the way they look at it was mostly on the issuance aspect. Yeah, they were, and how to tackle and how the way they were tackling the lifetime compliance of such tokens was through whitelist. And they were saying we create a whitelist, and either you're in or you're out. It's very binary, right? So and therefore how to so you know you can have many rules, right? So you can have MiFID. You can so depending on what you incorporate into tokens, you can have rules such as MiFID. Yeah, so you have to actually address the risk appetite of the client first, and therefore based on this flag, you have to restrict the transferability and the ownership of such tokens. You can have again you must have to trigger AML when you reach certain amounts, etc. But they were not addressing that. Yeah? It was very binary. So for us, why we developed it in the first place was really to have something more refined in the way we can restrict the transferability based on this rule engine. So it's basically a smart contract that has a lot of rules, and your own token, you can bind it to this, and this rule, and there is a rule engine that actually makes sure that the rules are respected every time you transfer and own, and you want to own such a token. So it's really, for us, it was really to go one step further and tackling the issue of the lifetime compliance of such a token. Yeah, not only looking at the issuance, because at the end issuance, it's an ERC20. Well, you can bind it to a whitelist, it's good, but it doesn't really help if you want to actually do something more interesting. If you look at it today in the US, most of these things are actually club deals. Yeah, so it's already sold. So it's basically they have a deal. They already have the investor. They already have everything. They added the tokenized layer on top. But what it brings today, not much, because only accredited can buy it, because this, because that. In Switzerland, we have this opportunity that we can address the crowd if you do proper prospectus. And also for the secondary market, you need to make sure that no Americans will get into it. You need to make sure that, again, if you want to tokenize Swiss franc, it's very important that you don't have the tokenized Swiss franc being on the darknet, used to buy drugs or even worse, because at the end you are entrusting the real asset, right? So the token is just a representation of what the company is entrusting, and so you're responsible.
Okay, we will keep the question for the panel because Arnaud has to go.
In any case, there is 3 of my colleagues here, so 2 of them are here and 1 is over there, Jan. So if you have you have questions,
big staff, PELERIN. So.
Sorry, I have to leave. I have a meeting in Geneva and I'm already a bit late. But they are here. They can answer all your questions, and of course they give you some cards if you want to actually come and meet us in Geneva in our office.
Thank you.
Thank you.
Thank you very much. Yeah, we've saved 30 minutes at the end of the event for a networking buffet outside on the terrace, so it will be also a good occasion to meet and ask all the questions. So now, let me welcome Vincent Trouche, Vincent, CEO and founder of Token Estate, coming also from Geneva, the tokenization platform, Token Estate. He will deep dive more into digital security. Thank you, Vincent.
Merci, Jérôme. Can you guys hear me fine? I assume so. Okay. So thank you for this opportunity. I'd like to talk about less about what we do, Token Estate, but maybe to provide some, I would say, high-level understanding about what are digital securities. So the idea there is to, I assume there are a fair amount of engineers and non-financial people. I'm sure there are. So maybe some of you guys will find this useful to see how we went from financial securities to ICOs and how we are now getting into digital securities. But let's get started. Maybe a quick question for those of you participating here. How do you define a financial security? So Harish, since you're here, what's your definition?
Financial security is a contract between a company and an individual or an institution of the relationship between them for gains, losses.
So a contract between two entities, basically, which will potentially lead to an exchange of money. Well, that's a good start. I can tell you're working in banking. Any other ideas? What will be the defining feature of a financial security, please?
A claim.
A claim, okay.
From one party to another.
All right. So right, basically. Okay. So that's a good start. I guess the canonical definition is that a financial security is a fungible instrument, so it can be replaced. Let's say 100 Swiss franc can be replaced by another 100 Swiss francs, so it's fungible. It can be negotiable. And it has some sort of monetary value. I would say that's for the high-level value, the high-level definition of a security. And to keep things simple in this context, let's say that there are two main categories of financial securities. There are debt instruments and there are equity instruments. So the debt instrument is probably the oldest one around there. Basically, you lend money to someone with the expectation of being paid back, with on top of it some interest so that you cover the risk you take by lending money to this person. Equity is something that is, I would say, a bit more recent compared with debt. And it's interesting just to take a step back because we're all immersed in all this technology, but it's interesting to see how this all came to be. So joint stock companies, which are issuing equity, are relatively modern. The first big companies established this way were in the early 1600s. And the biggest of all, you can tell that the Bitcoin at the time was the Dutch East India Company. So they rose money from thousands of investors all over the Netherlands. I think it was several million guilders at the time, a pure fortune. It helped them finance a fleet of vessels so that they could build manufacturing facilities in the Far East. They could defend those facilities in the Far East. And they were hugely successful because by pooling resources in this way, they were able to achieve something that hasn't been done before. And it's just a fiction, right? There's no fancy technology. It's just we define a new way to pool investment. And over time, it did create a stock exchange because you had the need to exchange those equity, which give you a claim, but you cannot get your money back. So if you want to get rid of a security, you need to exchange it, sell it to someone else. And this spurred the creation of the Amsterdam Stock Exchange and also of the Amsterdam Stock Exchange Bank, which was a key component of this infrastructure. So we see that those are very powerful entities. And as a matter of fact, today, you could say that, maybe some companies are, generating more revenue than Portugal, for example. So for those of you who own Apple, bear in mind that actually Apple has revenue that is over the one of Portugal. So we're talking of a highly efficient structure here, and it's something that is quite desirable, I would assume, to democratize. So now, we had to exchange those securities. So how do we get those exchange that we see today? How those, were created? So, you know, you find yourself with a share of a company. So how do you sell it? Do you just shout in the street and say, hey, I'm selling Nestle shares. Anyone interested? Nestle, anyone? Well, you say, okay, you know, let's meet somewhere. You know, let's define a place where we're going to be exchanging those shares. It's going to be an exchange. So initially it was maybe a tree, maybe it was a pub. You know, it was some place where people say, okay, if you have Nestle share, you go to this place, and that's where, you know, typically we gather with a few drinks. Okay, that works. But what if you don't live where the exchange is? Let's say it's in London, you live in Switzerland, so you have to go to London to exchange your shares. So, okay, let's say that we're going to create an intermediary where, you know, it's going to be a broker, a courtier, and this intermediary will be in charge of actually doing the trade for you because he speaks the language, he lives there, so it makes sense, you know. Okay, so you add brokers on top of it. But what if you don't have liquidity? You need to have kind of an entity which does the market making, right? Who provides liquidity, who is always on the market to buy and sell. So, okay, let's do the market makers. But then, do you really trust the brokers? Because the brokers, they speak a lot, they're very excited, they drink too much. Do you really want to have brokers holding on your shares? Well, okay, let's add custodians so that, you know, the custodians will own the shares and the broker will do the trade and the market maker will provide liquidity. Hey, that works, that's perfect, you know, but wait a second. What if a broker does a trade and actually he doesn't have the shares or the cash because it's not his, right? So, okay, we need an entity to take that risk, and it's going to be a clearinghouse. So now we have a third entity which actually matches the trade and makes sure that this works. So it's perfect, it works. But how about the company? The company which issued the share, which are being exchanged. How does the company know who to pay dividend to or who has voting rights? Okay, so let's add a third layer, you know, a registered stock transfer agent, and that's it. We have the financial infrastructure that we know today, and by and large, you know, this is working, this is fine. However, you know, the only problem is that it's quite expensive, actually. So today, if you want to be listed in Switzerland, you know, there are quite a number of hurdles that you need to overcome. You need audited statements. You know, you need to meet a certain threshold that, by and large, very few companies in Switzerland are able to meet. So today, if you look at the numbers in the recent past, you only have, you know, less than 300 companies listed on SIX. And that represents a laughably small percentage of companies that are, for example, over 10%. But you could say that, well, it's a very efficient infrastructure to exchange shares, which are very important to finance companies. So, you know, we have a problem here. It doesn't work for everyone. And this is something that we can address with digital securities. So that's a quick run through on the legacy system. Now, let's look at this new crypto economy and where it came from. So obviously there were cryptography and fundraising done in a crowd-funded manner before, but one of the key enablers of the acceptance of crypto was the great financial crisis. So you had a general distrust in financial institutions, and people started to wonder, you know, if actually banks were working for them or actually just working on their own account. And this led to the creation of Bitcoin. So Bitcoin came there because it was something that was fully decentralized, something that you didn't have to trust a bank with, and it provided, you know, this first, I would say, moment where people started to become aware of the power of blockchain and I would say in electronic money. But let's bear in mind that this is only the latest iteration of something that has been there for quite some time. In the 80s, this guy called David Chum, he created what he called DigiCash, which had some correlation with Bitcoin. However, it didn't take off. Why? Because you do need a certain amount of computing power for you to be able to run the blockchain. And back in the 80s, you know, very few people had computers and let alone smartphones. So DigiCash failed to take off and the money of the internet became Visa, right? But in 2008, it was a whole different game, and that led to the issuance and the acceptance of Bitcoin. But then some guys, they came along and say, well, you know, it's actually quite limited Bitcoin because, you know, to oversimplify it, Bitcoin can do well one thing, which is doing a transaction from, you know, user A to user B, to a grossly oversimplification, obviously. But came Vitalik and said, well, you know, we should do a Turing complete blockchain, one that can be programmed. So we can do something a bit more complex than just doing transactions. We can maybe program insurance contracts so that you contribute money to a certain account and if something happened, the money get paid back to the people who contributed to it. And this is Ethereum, and Ethereum becomes a bit the token machine. So we're using, along with Capital Market Technology Association, we're creating this standard which is based on Ethereum. Most people who do custodianship, they accept Ethereum. So what you see is that Ethereum is, today at least, something like the Windows operating system of the blockchain. It might not be the fastest, it might not be the, the hippiest or the fanciest, but it works, and also it's adopted by everyone. So it's working with wallets, it's working with custodianship systems, and so on. So Ethereum came about, and there was this new, economical paradigm, which was that in the past, with the technology that has been created, essentially the engineers that created this code, let's say HTML, for example, they didn't get much of the value that was created on top of the web. So the value was actually confiscated, let's say, by big companies, Facebook, Amazon. Those guys, they didn't create much of the infrastructure behind the web, but they actually hugely benefited from it. And now they say, wow, with the blockchain, we can wove into the protocol. We can embed in the protocol a currency. We can put a token in there. And that means that whoever comes with a protocol to disintermediate any kind of service is actually able to bank on this. And it was a bit, again, it's a simplification, but that's the idea that was propelling the ICO craze that we saw in 17 and 18. Obviously, the wheel fell off of this model, and I would argue that there are certain economical constraints that we need to keep in mind there. Because at the end of the day, if you're creating a system where you use the same instrument for investors, which are expecting a markup, a capital gain on their tokens, and it's used at the same time by the users, well, you have a problem there. Because as if you're building a house with paper money, right? So, you want the banknote not to be too expensive, otherwise the house becomes totally unaffordable. However, if the price doesn't go up in value, then investors are not happy. So you do have a number of problems that, in addition to the poor investor protection right, led to the demise of the ICOs and led to the so-called crypto winter. Now, it's not all that bad. What I'm saying is that today you see a handful of cryptocurrencies which are on the verge of becoming a key infrastructural component of the world economy. Obviously, Bitcoin, Ethereum. We hear about Facebook's Libra project. They want to create a global coin to facilitate exchange. So, there will be cryptocurrencies in the future, and they will play an essential part in the world's economy. However, a lot of the small projects, a lot of the small ICOs that try to raise, dozens of millions of dollars, I would argue that those are maybe, not in a position to survive the next few years. So that's the way I see the cryptocurrencies. But obviously now people are becoming more familiar with blockchain, and now we have the opportunity to combine blockchain, with financial instrument, which with plain vanilla financial instrument. So how do we define a digital security in a simple way? Well, it's quite easy actually. It's a financial security. So think about a share, a debt instrument, or you could also go into derivative land. So it's a financial security that is represented using blockchain-based digital asset, and that's it. Conceptually, this is what we're talking about. So you're using the same underlying technology than the cryptocurrencies. However, what you're doing is associating with it much stronger rights. That is the premise. So for a lot of people, digital securities, they look the same, but if you look carefully, you realize there are quite a few differences, right? So obviously the tech is the same. It's the same technology. You're using the same safety mechanism to represent both, I would say, possibly a random coin and a share in a company. That's the same technology you're using. But the investor rights are hugely different. So in the case of an ICO, potentially it's defined in the white paper, but if you're buying a Swiss share, well, you have a whole body of regulation there that defines what your rights are. And the issuer cannot just amend those rights. If you're issuing ordinary shares according to Swiss law, as an issuer, your hands are a bit tied. You know, it's kind of a format which is well established that everybody understands. Your lawyer understands it, your accountant understands it, the judge understands it, your grandmother understands it. You know, everybody understands what a share is. And you can enforce your right in court, and you can use it in classical fundraising efforts, such as a capital increase. And investors have a certain set of rights, for example, information rights or voting rights. So everybody starts to congregate around the model of digital securities because they seem to be well adapted to financing companies. And I would say they are probably, for EPFL startup, the way of financing yourself that you guys should be considering. If you are hesitating between an ICO and a digital security, the market and the practice and pretty much everyone is now moving towards digital securities. So people say digital securities is a new superclass of financial instruments, and there are good reasons for that. So let's look at the legacy models that we just described in the first part of this presentation. So private security, they are relatively easy to issue, and they protect you well as an investor, but they have a big drawback, is that they are illiquid because it's a pen and paper process to trade them, and it's hard for you to reach a large number of investors when you're using this legacy way of financing yourself. So it works, but hey. Then you have listed securities. So listed securities, well, you're solving the liquidity issue, right? But then it comes at an important cost. You want to list on the SIX. Well, you have to be ready to spend 6 figures. So not every company can afford that, especially not a startup. And cryptocurrencies, well, it's super easy to issue. You know, one click, done. Only problem, investors are not protected. And so by and large, is not something that you should use as a small company. So the digital securities, they seem to combine all those values together. So investors are protected because we're talking about the real stuff. We're talking about if it's a share, it's a share, it's a share. It's relatively inexpensive to issue, even if there are costs, to be honest, but it's nothing compared with doing an IPO. You can reach to retail investors in Switzerland, but we also do the EU, and we can reach qualified investors in the UK. So think about this, 600 million investors potentially, right? And then you can organize a secondary exchange of those with a listing on an OTF in Switzerland. And we know that the infrastructure is being built and that a number of banks are looking at supporting the secondary market for digital securities. So that is a bit, you know, the big picture for digital securities. So what are the benefits? We already touched on this, so I'll go quickly. First, you have operational efficiencies. As soon as you digitize something, then you can do it more efficiently. Simple as that. So if you are digitizing the ownership of a share, that means that you can you can onboard investors at scale. So today, if you go and talk to any Series B, C, D startup, they will say, well, the minimum ticket to participate in my cell is 200K, 1 million, several million. Why do they do this? Do they hate poor people? Well, not really. The reason is that they don't want to manage thousands of investors. So it's not that they hate retail investors, but they just can't manage them. But once you start onboarding investors digitally, you can dramatically lower the minimum investment ticket. You can manage thousands of investors digitally, and that means you have mechanically access to a wider pool of capital. So initially, if you're asking for a minimum ticket of 200K, maybe you can only talk to VCs. Maybe you can only talk to high net worth individual, private banks, and so on. Now with this, you can talk to anyone. And that actually puts the power back to you, the issuer. So that means you can get a better valuation. Compliance is obviously front and center. This was underlined by Arnaud. Be careful about what you do. Some ICOs got in trouble. They are well-documented case. Well, hopefully now you have the expertise, I would say, in Switzerland in general and in the Lake Geneva area to advise you on all this. And you'll find a number of companies and legal advisors that are becoming increasingly knowledgeable about this. So I talked about this. You can do smaller tickets that allows you to have a wider access to a pool of capital, and you can do this on a cross-border basis, and you can distribute it. The distribution is a point that is often overlooked. So Some people tell me, so what's the difference with crowdfunding? You know, some companies in the UK that are doing crowdfunding in a very efficient way. The thing is, you cannot distribute a crowdfunding platform. It's hard to onboard investors outside of your own particular centralized platform. Now, when you're doing a digital security, because the underlying is the blockchain and that everybody can check that, you know, indeed you've been issuing 1 million shares and not one more, that people have trust in the underlying representation of the equity, then this can be distributed through retail bank networks. And a case in point, for example, is Swissquote. Swissquote distributed Lake Diamond. And that is the tip of the iceberg, because what you'll see moving forward is retail banks enabling their users to invest in unlisted private companies directly from their web account. You know, so if you're a UBS investor or UBS user, maybe one day you'll be able to invest in some private tokens directly through the web interface of the bank. And that's what we mean by distribution, so that you don't have to onboard everyone yourself. You can actually enable banks, for example, to distribute for you. So here you go, you're now creating a massive distribution channel for private companies. And that is the game changer. And of course, you have the secondary market liquidity. So today, if you invest in a startup, even a large ticket, well, you know, it's hard for you to exit. There is no guarantee that you can exit. Now, if you represent things digitally, and if those tokens, those security tokens, are being listed on an exchange, it will facilitate the exit. It doesn't mean that liquidity will be guaranteed. There is no guarantee that there will be liquidity, because there are other factors that are of importance to define what a liquid market is. However, it will certainly be more liquid than if you're using the legacy model and relying on the pen paper process to trade your shares. So the solution that we see is that those digital securities, they will democratize investing. Switzerland has a competitive advantage in this field. Indeed, we're blessed with, I would say, a relatively decentralized country. And that means that today in Switzerland, you can structure it this way. Today, you can issue your own digital shares, and you can sell it to EU investors, for example. But this cannot be said of Italian companies or Spaniards. They cannot do this as of right now, because they have a certain number of legal constraints. So there is a competitive advantage in operating in Switzerland and in structuring your issuance from Switzerland. And we see that quite a number of companies are actually choosing to relocate to Switzerland for this very reason. As of ourselves, we're working with an EPFL startup. What else? To issue the digital security. And this startup is called Global ID, so we are really happy to be working with them and to help them issue their own digital non-voting shares, bond participation, that will enable them to raise funds. More on this soon. And obviously, we're working with our partner and investor, Swiss Rock Real Estate, in issuing digital securities that give exposure to development projects in real estate, and also working on digital securities to cover the ownership of real estate. For those of you who are more interested in, I would say, this part of knowing more about digital securities, we're organizing a masterclass at EPFL next week. This will be a 3-hour session. I will cover much more ground than I did today, but more importantly, Jackie Fland from Lens and Shilin will be there and will also speak for 1 hour. So if you're really serious about digital securities, I hope to see you there. I'm sure that listening to Jacques for 1 hour will cover all the expenses and your time. So you can register on Eventbrite, and you'll find it easily. I hope to see you there. Thank you, guys.
Thank you very much, Vincent. Excellent talk. I think we might take a few minutes for question now, because time is running. So after my presentation, I think we'll go directly to the lunch buffet. So any question in the room? Sorry, I think the mic is not working. So
but mine is,
loud.
I think.
Yeah, I just wanted to ask you. Hi.
Hello.
And I wanted to ask you, how do you deal with the voting rights?
Voting rights. So today there is a package of regulation that is going through that will be accepted by the end of the year, and that will enable companies to process votes digitally. So if you look at the law right now, it's something that is still an area where there are a bit of legal uncertainties, but this will be ironed out by the end of the year. And what you will do basically is enable people to vote through your company website. So if you have a general assembly, you set up a Visio conference, everybody can log in, you check that those people logging in are investors, and they can vote on the issues that you bring forward, and the votes are accounted for through the platform, and you can take decisions this way. So you can digitize such a process as well. Soon.
Okay, you said that you were dealing with, you were teaming up with Swiss Rock to tokenize real estate. When you said real estate, are you talking about real estate funds or real estate properties? And if this is properties, do you deal with all, the notaries fees and all these legal aspects of ownership transfer?
Good point. Indeed, we didn't dig into what we're doing, and happy to speak about token estate in particular, if you're interested. Today, it's hard for you to digitize the base level of ownership in real estate, like the land register, right? The cadastre. By and large, it's not digitized. It's maintained in a legacy format at the municipal level. So the way we solve that is that we are using a company which owns the real estate in a traditional way, so pen and paper, going to the notary, etc., and then issues equity.
Okay, so an SPV.
For example. And the insight is that we realize that people are not that interested in directly owning real estate. Let's say I give you 1 square meter of a villa by the lake. But you're not interested in 1 square meter by the villa by the lake if you have to manage the tenant, if you have to manage the maintenance. So what you're really interested in is into the cash flow that generates this villa. But you want to delegate the managing of this villa, and you want to leverage this villa with some debt. So what you're really after is the equity, and this is where we're focusing our model.
Okay, the whole package.
Yes.
Okay, both sides of the balance sheet of the property, i.e. the liability and the asset and the cash flow and everything.
So what we want is people to invest in the equity part, because the debt you can cover with the banks, and the equity is really what people are interested into. Thanks.
Also, you talk about the secondary markets.
Yes.
Is that something that is available today, or something that is being proposed by SIX?
Right. So as of right now, this is not something available. On the secondary market, there are very interesting development because, as Jacques would mention, all the rest is pretty much covered. The issuing equity, all those parts are pretty well covered. Now, what is still being developed is the exchange part. SIX has announced some project, but by and large, they are keeping it private. They're using a private blockchain, and for example, the tokens that we are issuing or that PELERIN is issuing could not be listed as on the SIX exchange as it is designed today. However, any bank in Switzerland or any securities dealer, négociant en valeurs mobilières, could become a digital security exchange relatively easily because they already have a license which is really hard to get. And to become a digital security exchange, the step is not that big, and as a matter of fact, there are quite a number of those players who are today working in being able to support those instruments. So our expectation is that you will have the first exchange live by the end of the year, and you should have several over the course of next year.
2 more questions, and then
Emmanuel, and maybe this gentleman after.
If I buy a token from a startup,
yes,
and I decide to resell this token to a Russian arm dealer,
yes, they tend to have a lot of cash.
With whom lies the responsibility of this
Good point.
sale? Is it with the issuer or is it with myself?
Yeah. It's one of those gray areas when you ask the lawyers about it, they start dancing. Just like, yes, it's... So basically, technically, the law doesn't require you not to get a Russian arms dealer as an investor, even if it's loaded with cash. Because if it's on the secondary market, you would not see the cash, right? This Russian arms dealer would buy it from one of your existing investors. So you wouldn't touch the cash. You wouldn't have a problem with the bank. The bank would not see a thing. The problem you have is probably on the reputational side, right? If you start having those sort of investors, that create an issue for you as a company, because if it becomes public, then the other investors will be like, well, sorry, but we're not investing in a vehicle which is partly owned or possibly partly controlled by someone under sanctions. And you will have the same issue if you onboard people from Iran or US investors. And the way we deal with this is that we don't allow it to happen. So what happens is, on the secondary market, on the secondary trading of the security, we are requesting all the investors to register with us or with one of our distributors first. So that you want to own token estate shares on the secondary market setting, you're going to buy them from, let's say, yourself if you're an investor. Well, this person will first have to log in, create an account on our platform or the platform of our client because it's white label, and it will need to register his identity. This way, you can vet, you can decide not to accept this person as an investor. And if a transaction goes that takes place between one known address and one unknown address, so an address you don't know who it belongs to, it will be automatically rejected by our smart contract. So that's how we deal with this. We just don't make it happen.
And the last question.
Yeah, how much do we know about the systemic risk posed by this sort of securities?
So if
what's the stake of the regulatory?
Yeah. So I will not cover the systemic risk which are associated with regular securities. So we're only looking at the delta part right here. So the only thing that changes really is that you're using a novel way to represent a financial instrument, and you need to make sure that it's watertight in terms of the legal side. So I would say, legally speaking, you're 99% sure that this is all good. For example, you're missing an update in the Swiss regulation that will formally, solve all the problem as far as the lawyers are concerned. And if you're talking to lawyers today, they tell you that they can't imagine that the regulation will not evolve in a way which will solve this particular problem of secondary market trading, because you might need a wet signature or a paper to validate a secondary trade. So the big banks are probably waiting for this to be formally addressed by the regulation before moving into the space. But you see that all the other players are fine with this level of risk. So that's regulatory, and it's, I would say, relatively small. Now you have the technical, right? At the end of the day, it's Ethereum. What's Ethereum? It might be controlled by a bunch of miners. You don't really know how it is. So what can happen is that you have a problem with the underlying blockchain. So there is a fork, there is something. At the end of the day, you're using an infrastructure which you do not control. So what you could imagine is that this leads to disruption in the managing of your shares, and you need to have, I would say, switches so that you can freeze your operation and move your token to another blockchain. So you need to be able to execute this operationally and legally, and this is what the players have in place today. So for us, we're using Ethereum. We can change blockchain anytime we want. We don't have to ask anyone. If we have a problem with Ethereum, we'll move to another blockchain. Our only promise is that we'll take the most common blockchain because this is what people want. We don't want to move to a niche blockchain which has low adoption. We'll keep to the mainstream ones.
Thank you very much. You will have the chance to ask all the other questions during the buffet networking that we will have just after my talk, the last one. I will try to keep it short. So, yeah, today I welcome you as a head of membership of the Western Switzerland chapter of the Crypto Valley. But I also spent my last 12 months working on an ICO local, the Lake Diamond ICO. So I spent 1 year in the Innovation Park, building D, second floor. Yeah, that's what I will tell you now. So I was in charge of the marketing and communication of this really unique, first of its kind ICO. The first time that we decided to tokenize production time of diamond, lab-grown diamond, for high-tech applications. The first, I think, the first ICO of a PFL spin-off. The first one that has been distributed by a bank worldwide. This bank is Swissquote. And yeah, we benefited from pretty deep media coverage. We've done a lot of events, 25 more in 5 countries, and also you can find us online. So what I will tell you now is, as Arnaud told that, one of the most important, I don't know if it's the most important, is the marketing, because how to sell this token to a crowd, and that's a big challenge. Everything is so new. It started maybe less than 2 years ago, and it's changing fast. So first of all, token sale is a sale, and to sell, you know that you cannot sell without any marketing and communication. Then it's a new target for a company, especially B2B company. It's a new target because you are addressing the general public, the individual investors. So okay, the technology, as Vincent told, allows you to sell tokens to thousands of investors, but you have to address them. You have to talk to them. You have to tell your story to them, and you also have to create your community. These investors are not only investors; they are part of your community. They are your ambassador. And one key point I learned is that it's also very good to boost the awareness and reputation of the company. Usually, EPFL startups are not the best to market themselves, but if you're going into an ICO or STO, then you don't have any other choice than to go on the market and say you exist and you can invest in the company. So it also helps you to find clients because it boosts your awareness. It also helps you to recruit staff, and it helps you for the later fundraising runs that might be in VC. Once again, tokens and VC can play together. There are some challenge, of course, a lot of challenge because most of the public don't understand anything about crypto and blockchain. So that's why we have created the Crypto Valley Association. We need to explain what the token is, what investing to invest in token is. Then, as a marketer, we also have to play with the ban on major social network. You cannot promote directly the sale of your tokens. Things are changing a bit, but at least on Facebook, Google AdWords, and Twitter, you're banned to buy traffic. But of course, you can use the organic. Then journalists. The journalists are not buying ideas now. They want real project. They want project with team that delivers. And yeah, the era where you can raise money with just a website and a white paper is over. And you have to address two type of audience. You have to address the token investor that are either familiar with blockchain and crypto, but also at the same time speak to the general public. In terms of marketing, that's not easy to address these two different audience. So first of all, the campaign. It's a campaign. It's a communication campaign. You have to define your targets, geographical targets. We decided not to go in the US, not to go in China, not to go in Korea because of the regulation, but we focused on Europe and mainly Switzerland. You have to define either talking to retail investor or an institutional investor or both at the same time, or do different phase like private sale and public sale that we've done. How do you address the crypto fanatics, to the people that are in the game since 2008 sometimes, and they are really different type of folks to manage. And of course use influencer, both ambassador and media. The usual planning is start 3 months before to start your marketing campaigns, 3 months before the sale. The sale is usually 1 month, and then don't forget to communicate after the sale also, because if you don't want your investor to freak out and think that you left the country with the money, it's so very good that you do a communication soft landing and keep on communication. Then the team, the marketing team, at least one person on site, at least one-man show. That's a lot of work, working with agency and freelance, like specific design, video, PR. And use your partner. Use Innovo. Innovo was the partner of Felix Diamond. They helped us a lot. Thank you again. Eugene, who is the community manager of Innovo, is in the room. And he retweeted a lot of our tweets, and LinkedIn too. EPFL Mediacom, it's a trick that I give to a PELERIN Innovation Park entrepreneur. It's a free PR agency you can have. It's the best PR agency you can have because they can write articles on your business, and they can push these articles to their network with the EPFL logo on it. So EPFL Mediacom, don't forget to work with them, and they are really into finding new projects to promote. I will focus myself only on 3 parts: the trust, how to get the trust, the content of the community, of the marketing, and of course building the community. How to build trust, how to build confidence. So first of all, review your brand asset if you have. Review it. It's a good opportunity to review what you have in terms of logo, brand guidelines. Then review all the different stories you can tell. It could be background. You have amazing team. You have partners. You have already done some project. You have a vision. You have a unique selling point. So gather all the potential stories to tell. Then you can earn trust with media endorsement, and that was maybe the most important point for us, is to talk to the media and get the media coverage. So we decided to talk to 4 types of media: the top tier media, Financial Times, Le Monde, Forbes, and Wired, mainly business oriented. Then trade media, depends on your tech, but for us it was more physics, mainly based in the UK. Le Temps, Swiss media, they are all buying crypto and blockchain stories these days, so not easy to talk. So of course you have Le Temps, NZZ, CNN Money. It's not a official subsidiary of CNN. It's a franchise of CNN for business and for Swiss market, and they love blockchain. So you have to talk to them. And of course, there are the blockchain media outlets, like it's really specific, like Condesk, Cointelegraph, CCN. If you want to talk to the crypto geeks, then you have to also have some articles on that. Then prepare the stories, gather one equity story that will be the basis of your press release, at least the first initial press release of your token sale launch. Then contact the journalist. It's just like selling. You're just not selling products or service. You're selling your story. You're pitching your story to journalists, and the follow-up interviews. Ask for correction, to read again the article. Sometimes they don't catch exactly what you're doing, and try to synchronize the publication. You can do that alone. It takes time, or you can work with a PR agency that will boost and help you. Then the content. So be your own media. Everybody can be a media these days with social media. So there are never enough content. Create as many content you can to be in the feeds of the people, to be top of mind of the people. Publish at least weekly, twice a week might be better. Depends on each network. We'll also see that. You can set up your own blog platform on your website, or use one existing. We use medium.com. I pretty recommend it. It's really easy, and it starts to become a standard in terms of blog platform for token sale. Once again, you have to schedule the publication agenda, 5 months, 3 before, 1 month sale, and one month after. Type of content, anything. So it could be text, articles, could be infographics, video, motion design, and build a big photo library of your team, your products. For us, of course, video is the best, especially on social media. Motion design works quite well. It takes a bit of time to do, but it can worth the investment. Then the community, build it online. First start online and we meet them offline. So start online, you have to choose the right social media. So for us, the 2 most important social media were LinkedIn and Twitter. LinkedIn because it has a very good reach among manager, potential investor, especially in Switzerland. Twitter is good for influencer and journalists. So Telegram, it's the crypto geek social media, and it's very difficult to manage. Honestly, I've tried, and it was not a success at all, and we lost time and money. So we decided to drop our Telegram because we realized our investors were not crypto geeks. They were people coming from business. So we decided to focus on LinkedIn and Twitter. Medium is a blog platform, but it also can be a social network if you know how to use it. And why not use this Instagram if you are really into something that you can use pictures in fashion, in trend, in luxury. So then, after you're selected, you have to manage and grow the community. Once again, 1-2 posts every week. Twitter, it can be every day. LinkedIn, 1 or 2 every week. That's enough. You have to answer all the question, and that could be a lot. It depends on the size of your network. The paid post, as I say, some of the networks don't allow you to pay, like Twitter, we were blocked, LinkedIn also. But you can also use paid posts for non-related token sale content, so promoting your company, not talking about token sale, and then you can buy some traffic. Of course, the ultimate goal is to transform this follower into ambassador, so that they talk about you and that they invest. So build online and then meet offline. So the roadshow, going and meeting the people live. Start before, and of course during the sale, go out and play. Organize your own events. The meetup.com platform is a great one. It's a pretty well used in Switzerland. You can connect with partners like Crypto Valley. We have several thousand members in our meetup.com channels, so we can co-organize events together. Speak at main events. The CV summits organized by CVVC are one of the best events you can find. They are Zug twice a year. And of course, join the Crypto Valley. We can custom-made events with you. You can talk to one of the largest community. We can custom-made, and we can travel with you. So we travel in Singapore, FINTECH Festival with the Crypto Valley. So Crypto Valley invites Lake Diamond to fly to Singapore and talk to Singapore investor. It was great because for a small startup going in such a big event, it's really difficult to organize. You're lost. But there we were gathered with some other interesting projects. The last words. It's the rules and best practice of token sale are changing quite fast. So work with specialists in legal, in finance, in tech, and in marketing. You will learn it. Don't be afraid. You will learn by doing. Remember, you are in the best country to do it. Switzerland is the crypto nation, maybe the first in the world. It's a new era. You have to jump. You have to join this revolution. And today, 2 hours ago, 1 hour ago, the big news is that Facebook is coming. So we heard about it. So now it's official. Facebook is launching the biggest cryptocurrency ever to be available to 2.4 billion users. And it will be partially managed in Geneva. So that's the great news. Some people say it's September 11 for the classical finance. Well, I prefer to see it as the beginning. I prefer to see it as the beginning of the real beginning of the adoption of cryptocurrency. Even the biggest, like Bitcoin, was not widespread. I remember your question was maybe 1/4 of the people own Bitcoins. Next year, everybody will own the tokens that the cryptocurrency issued by Facebook. So you will check on Twitter. It's everybody are talking about that right now. It's crazy news, and very happy to welcome Facebook in our Crypto Valley. Next week, last slide. We have our flagship event. So it's the Crypto Valley conference. 3 days, 26th of June in Zug. More than 1,000 people attending, lots of great projects, lots of investors. And especially for you, today I have a last minute, okay, it's next week, but really last minute 50% discount on tickets with this code CVC, Crypto Valley Conference, CVA, Crypto Valley Association West for Western Chapter. You will find it again on the leaflet that I will give you at the end of the event. And bit late, but still 15 minutes to go out and to drink and ask questions. Thank you once again for the aperitif organized by the EPFL Innovation Park. And yeah, I hope you enjoy it, and see you on the terrace. Bye-bye.